Hey, Mortgage Coach community, Dave Savage. I am recording live out of Seattle with Jay Crowell with Cornerstone. What's up, Jay?
Hey, man. How are you?
Good, good. So we've had this on the schedule for a bit. We were going to do it on Zoom. I mean, we are on Zoom, broadcasting live in the Mortgage Coach Facebook group. But I'm here in person, so I thought it'd be cool to get together.
Awesome to see you.
Yeah, it's good to see you, man. So first of all, for anyone on this call, I always like people to get a feel for Jay's mortgage practice. It's got a really nice office. I mean, this is a great vibe. If I was a home buyer coming in to meet with a mortgage professional, this is nice.
Yeah, it's a good place to work, and I think it's also a place that when people come in, they go, I'm dealing with a real operation and real people, but also a professional place.
An expert. You know, I mean, it would be on par with a CPA, a financial planner, and I think that's how you want to show up.
Exactly.
I am your mortgage advisor.
Yeah, my desire is that the mortgage industry is looked upon the same as financial planners or CPAs, so that, you know, like my kids are excited about the industry versus, you know, back in the day, it's kind of like, oh, used car salesmen, mortgage people.
Right.
So we definitely want to bring that level of integrity and work ethic and professionalism. Yeah,
and I think I haven't interviewed your realtors and your financial planners, but I'll bet you are like the captain of the wealth team. You know, the families, you got the family, you got the CPA, you got the financial planner, but they really look at you as a leader. Is that, do you think, I know you work.
I would hope so. I would hope so.
Yeah.
You know, I mean, my desire is that they feel like that, you know, when we work with our team, that they're, you know, getting supported and they're, you know, we're bringing real value to their community and to their people and the families that we serve.
Well, I am going to do the rest of this interview. I really focus it around delivering a mortgage experience that makes you the captain of the wealth team, so that the CPA, the financial planner, everybody looks at you at a level of leadership, and the family sees you that way. They see you as someone, remember, you know more than the financial planner has. You've got both sides of the balance sheet. You've got the credit report. So let's get into it. First of all, anybody who doesn't know your production level, if you could just tell everybody, you know, what kind of production are you doing? What's your team look like, so they kind of understand where you come from?
Yeah. So I manage, and I also am still in personal production. Our personal production, we're just shy of 100 million last year. We were about a little over 100 million the last couple of years, and been pretty consistent. You know, it was 100 million in 2007, so I've had a good run. Been in the industry about 16 years. Our team is just on the sales side. I have a executive assistant, but she's amazing, wears a lot of different hats on the management side and marketing side. And then we have a kind of client-facing customer support person, and I have a production partner. We worked together for a long time, and he's amazing, and, you know, operates as a loan officer on our team.
And then you also operate as a branch manager and regional leader.
That's right. Yeah.
How much production in the whole platform?
Yeah, we did. I'm going to be I want to be careful on what I quote because I was wrong last week.
It's okay.
But, you know, we have a very, very good group that's, you know, from Alaska to Oregon and in Idaho, and for the region, we're excited about future growth.
Any idea how many families you guys served, or just a rough estimate? If you don't want to quote it, like,
I want to be.
Well, look at the last interview I did.
I'm going to get in trouble because my friends and colleagues at the company would know their stats like this, and unfortunately,
it's a lot, guys.
I don't. Today is my son's birthday. I know he turned 8.
Yeah, right. Well, I mean, again, $100 million in annual production, serving a lot of families, and leading a region that does a lot of volume. Check the last interview. I'll put it down below. And I'm not going to quote a number either. And I think that's important. We want to be successful. We want to make money. We want to serve a lot of families, but we want to do it in a way that helps families build wealth with real estate through smarter mortgage decisions. So let's talk about how you do that. So first of all, what percentage of families come into your office and get this office experience?
Yeah, our goal is that everybody we get to meet with face-to-face. So if they are a repeat client and they're, you know, on the go, then, I mean, typically everything's happening over the phone. But I would say that 100% of our clients get a mortgage coach experience, that we provide that to everybody we do a loan for. And that's our goal for, you know, our region as well. I would say face-to-face for new facing clients, it's probably about 80 to 85% of the time we're meeting face-to-face.
So did you guys hear that? 85% of the time meeting families face-to-face. 100% are getting mortgage coach, whether it's an in-person mortgage coach with a link after they leave, or whether he's driving the live interactive experience. When I post this on Facebook, there's a picture I have of Jay consulting a family. That's going to be the cover picture. So like when you see this image on Facebook, you'll see Jay, what it looks like to be a family in his office, because it is a unique experience in that you're giving them a mobile, you're using your iPad.
Yeah.
So let's talk first. Give us a quick script on how to get a family to come into your office. Like, what is your team saying? You don't have to get into the details, but give us the high level. What do they say? What's the promise?
I think that, we talk about just the process of pre-approval, getting pre-approved, and then meeting for a pre-purchase consultation, and the value of why that order matters. And then also, why we want to meet in person is it's a big transaction. We want them to get to know us, and we want to be able to get to know them so we understand their long and short-term financial goals, and find that that's just more efficient to do in person.
But what do you say to the borrower? What do you say to the borrower? Like, is it really assumptive? What's the script so the borrower comes to your office?
I mean, it's just that. I mean, I tell them our process of how we do it, and I basically just say, we're going to have a pre-purchase consultation that's in person. So
it's leadership, assumptive, and did you notice, and we want to go over your long-term and short-term goals, this is how we do it.
Yeah, and my thing is, the reason why I like a mortgage coach presentation in the TCA and why I do it on every file is because one of our key tenets is we do mortgage planning. And, whether somebody wants a lot and they need a lot of help, or somebody kind of already has what they want to do, we're still going to present it to them. So I know that in my mind, I can put my head down, my pillow at night, and know that I delivered one of my key tenets, which is advice, not just, solutions.
So another takeaway, the integrity. There are a lot of loan officers that say, hey, I show you your long-term and short-term goals. I show you different mortgage options, and then they give a fee worksheet. That is incongruent with the promise. There's a lot of loan officers that say, I'm going to help you build wealth with real estate, but then they don't show strategies to build wealth with real estate. So I love that. I love that, being Mr. Mortgage Coach and all. Mm-hmm. So let's get into a total cost analysis. I'll pull up the screen in just a minute.
Okay.
Before I show the screen, what do you say to the family before you show the TCA? What are some of the questions you ask? And then what is the actual positioning statement as you say, hey, I want you to look at, and what do you call it? And what's that sound like?
We call it a total cost analysis. I'd say our consultation consists of, standard conversation and dialogue of getting to know people, and getting to know them, asking them what they want to accomplish from our time together. And then I kind of talk about if they're first-time home buyers, they haven't gone through the transaction, I kind of there's some pieces of the purchase and that I think are clunky that I want them to really understand before they see numbers. I then go through a rate watch.
Rate watch on here?
On my iPad, I pull that up so they have the ability to kind of understand how the market, looks and how it's very volatile. I think that a lot of people are selecting their lender before they've gone under a contract, which is good. You should identify your lender before you do that. Especially, in our situation, we have advanced approval program. We can close in 10 days. And that's not just like an exception. That's,
that's how you roll.
That's a corporate initiative that has our, Mark Laird say we want 85% of all of our loans ready to close in 10 days.
Clear to close.
Yes. So for us, we know that there's a true value proposition the client receives when they work with us at Cornerstone. But you're not getting all that if it's, I got under contract today and I'm looking on my lender. Right. So you should have your lender kind of position, and you should get a sense of where pricing is. But if you're making that decision just based on a price, we try to explain that lenders can tell you their rate is X today and tomorrow it can change regardless of the market. Right. But also, a lender can come in and say, hey, my rate's 4% today, Dave. Right. And I know you're not getting under contract for 3 weeks. Oh, well, the market went up. It's really 4.75, and there's some misleading that happens, which I think is
confusion.
And I think it's also just it's bait and switch, which is disappointing.
There's a lot of lenders doing that. So
I think with that, I talk about the market and where it's going and help them understand.
How long is that conversation? The market.
It depends on what they want to go with it.
Couple minutes?
I would like it to be
no more than 5.
Yeah, no more than 5 unless they really want to dig deep into it. I don't explain candlesticks. It's just a sense to be able to for the client to really to understand that the Fed doesn't dictate what mortgage rates are. We talk a little about what the Fed actually gets to control. And then we also talk a little bit about, just the volatility that the rates.
It doesn't change daily or weekly. It changes hourly.
Exactly. And I just say it's the same as Amazon stock trades, mortgage-backed securities.
I like that analogy.
So just to give that kind of sense, because, I will tell them, we'll create as many total cost analysis reports that you want. And I'm kind of leading them up to like, they know we're going to cover that.
Right.
Because when we start the conversation, they're like, we want to see pricing. So then I bring out the total cost analysis. I have it on my computer screen.
By the way, was it already set up?
I have it it's already there.
Did a team member do that, or did you? Who does the setup of the mortgage code?
Angela on our team creates them.
So he's got a team. Someone else does it. If you don't have a team, it's still only 2 to 5 minutes, and you got to do it.
It's easy to do it. It's just for me.
I think most teams, someone on the team is the mortgage.
Yeah, we have a really nice email template that I fill out really quickly. So I still price out the loan, and then Angela puts it together for us.
Cool.
And so for me, anytime I can be out of data entry, that's an energy builder for me, not an energy retractor. As easy as building a TCA is, it's still 3 minutes of time that I didn't have to do. You
have someone on the team to do it, so you can focus on. So one last question.
And she makes them more accurate, because I'm going to have a tendency to maybe not do the most accurate on property taxes and insurance. Just my nature is like,
your Discord, you are not you're probably a higher D than a C.
I have really, really low C.
Yeah, I know the feeling.
So
the S and C is not high in my world.
Yeah, either. Yeah. So that works out. So I think that clients get a better report as well.
Good.
And there's some checks and balances, because if I send one to her, she might go, those clients don't qualify for that.
Right.
And I can go, okay, you're right. We need to like revisit this before I send them those options, and they get excited about that house. So it's really helpful to have a team and accountability that way. And so we bring out the TCA, and I'd say this is a total cost.
By the way, let's start showing the total cost analysis. So you guys heard it. He does his consultation. He does a minute, no longer than 5 minutes, with Rate Watch, with the goal of, I'm an expert, and rates change. Not weekly, not monthly, but hourly. And now it's time we've got some ideas for you. So however you would set this up for the family, and how you would walk them through it, if we can kind of mimic that.
Yeah. What I would.
And here, the mouse is yours.
Okay. So typically I'll explain, we have a total cost analysis, and what we've laid out is, this is, just an entry level starting point of kind of with a price point that you kind of said initially you were interested in, and the down payment you were looking at. And right now you can see that we have 3 side-by-side exact same purchase price point and loan amount scenarios. And what we're looking at is different strategies to help you look at your cost of financing over the time that you're going to be using this mortgage. And so we would, walk through.
I love your language and your words.
We're going to stay on this main page, and I'm just going to show, there is a difference in interest rates. And that's what you're going to see the difference in. And as a result, it's going to be a difference in your cash to close.
Do you ever, click on this button and get into any of the details?
Yeah, I'm going to go through, as soon as we talked about the summary, I'm going to explain to them from here, I'm going to more info, and I'm going to show them the closing costs. Now this is my way of doing it.
That's what I'm interviewing you.
And every other people in our office that are top producers, and even I think Jacob, he does it a little differently than the way that I do.
Everybody does.
But it's authentic to me and how I want to communicate it. So I will explain the points, so they understand that that's the dynamic of it. And I'll tell them that basically all the other costs, the prepaid items, and the closing costs are going to be pretty much the same, except for prepaid interest, except for the points.
Right.
And so helping them understand that, I'll talk to them about the importance of understanding break-even analysis, not as a function of the, what I paid up front and what my monthly savings is. So I go over the savings over 60 months and show them that strategy A is going to be the lowest cost of financing over that 5-year strategy. And so then we start talking about, we move off the TCA and talk about when they think about their time horizon in the home. What do they think? And obviously that can change because they probably haven't gotten a house already. And so it helps us kind of thinking about that. And then, most people, and I think it's the right move right now, even though, say, in my tenure in the industry, I've been an advocate of adjustable rate mortgages, but relative to where the market is and where the projection of where the market's supposed to go, I think a 30-year is a good plan for a lot of people. But it does lead into, if they have expressed, I want a 30-year fixed rate, but then they're saying, well, we're only planning to be in our house, 3 to 5 years.
Then maybe an ARM.
So then at that point, I'll talk about ARMs, and we have a buyer packet that we give clients. And in that, it does talk about the different types of financing. And so I'll show them on that packet, and we give that to them when they need.
So a couple questions. So,
but I'll go back to the closing cost thing, and I'll pick the 0-point fee detail, and I will show them every single cost.
Okay.
And I will explain.
So you are getting into the detail of that.
I'm going to go to that, and I'm going to click on fee detail, because I find that I want them to understand what's third party, what they're going to pay with every other lender, regardless of who it is, and what they're for. So if they've never gone through the transaction again, I want them to understand why I'm paying title insurance, why there's an escrow. So I explain, those two things. And then I tell them, what our two flat costs are, regardless of, loan amount, our processing and underwriting. So I want there to be transparency on that.
So this is, how Jay does it. I've interviewed loan officers where they put in a bulk number, and there are compliant ways of doing mortgage coaching. I'm going to put a link to an interview down below where I interviewed, Jay wasn't in the interview, but I interviewed 5 top producers. And it was how they create a mortgage coach in 5 minutes or less. Kelly Zitlow was one of the 5, and they all had different ways of doing it, And so I'm not here to say which was right. Which the one that's right for you is what works, that you feel comfortable and confident. And I do think one best practice that, if you're on this call and you haven't adopted this, there's what I call next level transparency, And so the family comes to you and they have an expectation of the transparency they're going to get. That's a fee worksheet. They expect you're going to get their monthly payment. They're going to get their closing costs. But when you show things like, oh, let's look at this over 60 months, that's next level transparency. That's something that other loan officers didn't do. And that builds trust. And also that builds value. So that Jay has this integrity. Hey, come into my office. I'm going to help you look at your long-term, short-term. I'm going to give you advice that has value. This is what gives value.
Yeah, and I think
you're getting to look at the longer time.
And it's really frustrating to me because, and I did this in my first few years in the industry, my break-even analysis just on whether you should buy points or not was strictly on what's my monthly payment savings and what's the cost, and dividing that. And that's really bad. And helping understand how the
it's not great leadership.
No, it's the function of how you understand amortization, principal reduction, and interest savings, and showing them like we're factoring all the different costs. And I will always show the long term, so they are what that savings is, so they can go meaningfully look at that difference.
Love it. So a couple other things I want to point out. Very intentional about his branding, corporate brand, personal brand. Want to remind you guys, you can switch views to see this in different ways. You should be sharing a link to not only the family, but the realtor. And really be looking to, like, if that family is borrowing the down payment from a father-in-law, you want them to get a link too. You want everybody to get this information so that everybody's got the confidence and the clarity that you're bringing. And then I want to remind you guys that you can translate this. We can translate this in Spanish, and you can print it up. That's how some people want it. Not everybody is super mobile savvy, and giving people advice in the channel, in the format they want. That's what you do. That's what the best do. So I've got a couple more questions. One, when do they get the link? Like, they're in your office, you have your iPad.
Yeah.
When do you give them the link, and how do you give them the link?
So what I do is, unless I know more going into it, I've pretty much built a scenario like this. And I typically will do 3 to 4 options, depending on how I'm looking at the pricing. My ideal situation is 3 options because my wife's a psychologist. I've read a lot of books, and people like things in 3s. And so typically it's, a big buy down, a little buy down, and no buy down. And then sometimes I'll show, a rebate pricing so they can understand
Mm-hmm.
that as an option as well. We'll have the conversation. Typically, there's some modifications. So, like, let's say, you know, you filled out the form, and we talked for a minute, but, you know, your wife's with you now, and she's like, I really want to be at $1 million.
Right.
And you were saying it's 800,000. So I built this whole thing. So I'm going to tweak it. I might build 2 after our conversation.
Okay.
So typically, I'll build one that is more realistic to where they want to be. I'll send that to them in the link. In addition to, most of the time after that conversation, I'll give you a range. So, because after that conversation, you know, your wife's saying, I think the houses that we want are $1 million.
Right.
And you're kind of going, so we'll talk about the difference in payment in that conversation, but I'll send it to them. So I'll send them, say, at 800 with 0 points, at 850 with 0 points, 900 at 0 points, and say $1 million at 0 points, or some range that way. So that you get a sense, because a lot of times the payment's not that meaningfully different, you know, on an $800,000 house versus a $900,000 house.
Right.
Not saying it's not insignificant,
Right.
but for people's budget, I think they lose sight of the affordability of the mortgage.
Got it. I also want to make sure we call out the fact that Jay's packaged them as strategies. You know, so this is a 30-year fixed rate with 1 point and 0 points. And it's not programs, they're strategies. Just, I want to wrap this up within like 4 minutes, but give us 1 minute on why strategies versus programs.
Because I think that we should be thinking about it that way. You're selecting a plan for how to finance your home, and you're looking at how are you going to manage your debt the best way possible. And if we're talking about it as a product versus a plan, I think it's just a different shift. And I think that
words matter.
Words matter. I think mindset matters, and going into it from that standpoint. Now, if there is a ARM versus a fixed rate, we'll make sure there's some clarity around that. Like if they wanted to see both side by side, because it doesn't, in the report, it doesn't say fixed rate or ARM, which is fine. But I do want people to make sure they know what they're getting. Sometimes they want to see 4 fixed rate options and then some ARM options and separate TCAs. So we tell them that we can cut this up 100 ways from Sunday, however they want it. And if they want to see it on properties as they continue to search, just send us the link and we can build a new TCA. So we just want to be involved in that process, but we want people's mindset to be thinking about selecting the best financing for them, not getting hung up on a program or a rate or fees.
So if your goal is to be the captain of the wealth team, you know, versus just being a loan officer that does a transaction, words matter, strategy matters, position yourself at the point of sale differently, deliver an advice-based experience. Like Mortgage Coach, you know, the 2 things, my 2 themes to this community throughout 2019 is just, you've got to be an advisor. And so that's why I do interviews like this one. So right here, you can see our YouTube channel. This is the 21st mortgage strategy interview that I've done. And so there's a whole playlist where I'm interviewing top producers that are doing, you know, a lot of business. You know, Shannon is closing 150 loans a year in Bozeman, Montana. She's awesome. You know, so people that are doing a lot of volume, helping a lot of families, and then how are they delivering advice? I also want to show everyone that we just released a new mortgage strategies page on our website. So if you go to member services, it's called Mortgage Strategies. And what I'm doing here is we've got like 21, and by the time this year is over, I mean, I'll have a lot of mortgage strategy interviews, but we're taking some of the best ones where it's a great loan officer story, top producer, like Jay Crowell, 100 million plus managing a big region, killing it. And then there's a family story and there's a strategy, you know, there's mortgage strategies. So make sure you check that out. If you're a manager on this call and you want everybody in your team to become a mortgage advisor, this is an obstacle course. You know, get them to run through this obstacle course. Once they can climb the hill, you know, and do the you know, past client review, you know, let's make them run through it and do a purchase options, and then make sure they can do a rent versus own, you know. So it's by the time they've gone through all these mortgage strategies, they are a black belt in Mortgage Coach. So that's the vision for this. So I'm going to stop sharing the screen now, and let's just wrap this up. What's your advice to loan officers that either aren't delivering a total cost analysis, or I have a lot of loan officers that they're like doing it sometimes. You know, they're waiting until they get grinded to do it, or they're like, oh, you know, this is the engineer, he wants it, this is the person that not. They're like
prejudging people,
Mm-hmm.
and then deciding who they give the mortgage coach experience with. You know, you manage and lead a lot of loan officers.
Mm-hmm.
What do you tell your team when it comes to consistency and mortgage coach?
Well, I think it's just that, like, be consistent. And I think the easiest way to do things is to make it a part of your process. And
Right.
so there should be a process from start to finish, and trying to create the perfect experience for your client is something that you really should really have solidified. And so,
And do it consistently.
and do it every time. It should be the same thing every single time. Now,
Because you can't get great at it if you don't do it.
Exactly. I mean, my dad always said, as a basketball coach and great leader, he said, you know, the mother of all learning is what? Repetition. So just be consistent with doing it, and that becomes your, you know, way that you handle your practice. And so I think for me, it's just doing it every single time is what it's I'm on autopilot. I'm not thinking, oh, do I want to do a CAW this time, or do I want to do a TCA? It's just, that's what we do.
This is how we go. And so takeaway for everybody, consistency is the key to success. I don't interview top producers that don't have consistent processes and ways that they do things.
And I'm on the go all the time.
Right.
So why would I want to be in a situation where I got to go try and find a CAW that I may have sent out as a PDF attachment for some clients? All my clients, everybody, and we work out as a team. Like, so we're true partners. So if I'm on the go, Jacob can log into TCA and knows exactly what's happening. If he's talking to somebody and he was in Hawaii last week, I can pull up the TCA that was given to 3 clients that got under contract.
Yeah, I'm logging into my mobile app right now just to remind everybody on this call that you can edit the total cost analysis right here. You know, just mobile app, go into the specific name of the person, add a video, do live, and edit it. You know, I just, the interview I did with Shannon O'Hara yesterday, or a couple days ago, it was all about, you know, the mobile app. So if you got value from today's interview and you liked it, give us a like. You're watching this in Facebook or checking it out you're watching this in YouTube, give us a like in either YouTube or Facebook. If you're a manager or you have mortgage friends that you think would get value, share it with them. And brother, I appreciate it.
Absolutely. Great to see you.
Really, really appreciate it. Have a great day, everybody. Hope you got some